But on that note, let's quickly get on board with our technical expert of the show. We have with us Nilesh Jain of Centrum Broking. Nilesh, good morning. So good to have you back. 10th day of losing streak, as I was mentioning, for Nifty, but it still managed to hold above that 22,000 levels. What are you eyeing next on the charts?
Decline for the 10th consecutive sessions now. Yesterday, in fact, there was a bit of respite where the Nifty managed to end about 22,000. That's the only positive that we saw yesterday. But overall structure is hinting that going forward, sooner or later, we'll break 20,000 decisively and move towards 21,800 to 21,700. So that's the next level that we are expecting to be tested. But if you look at the weekly time frame chart, 100 weeks moving average, that is coming around 21,800. That is going to be the major support from here. If at all it breaks below 21,800, then the next target would be somewhere around 21,200. But looking at the overall setup for the Nifty on the daily time frame chart, where the RSI has gone into extremely oversold territory, there are possibilities of a dead cat bounce and a pullback. This pullback may take Nifty towards 22,300 to 22,400. It looks unlikely to be as sustainable on the upside. But yes, more sort of a consolidation is something we are expecting today. Bank Nifty, on the other hand, which is showing relative strength compared to the Nifty index, it has formed a triple bottom kind of formation at 47,800. So 47,800 is something in the Bank Nifty that needs to be closely watch out for. If at all it breaks below 47,800, then it will be considered as a structural breakdown. But as of now, with a stop loss below 47,800, a contra bet in the Bank Nifty can be taken. So overall, stock specific action is something that we are focusing, and it is better to stay cautious on the index front, since both the indices are trading at their crucial juncture.
Okay, crucial juncture they're trading at, Nilesh. But Nilesh, yesterday we saw good participation from the PSU banks, and SBI was of course, the top contributor for the Bank Nifty index too. But what are you watching out for SBI as a counter? We saw a good upgrade from CLSA that came in yesterday.
Absolutely. So for the second back-to-back session, the State Bank of India has witnessed a strong signs of rebound. But as mentioned, there are possibilities of supply coming in at the high levels, even in quality stocks. So this particular counter should be looked at from a positional perspective, not from a trading point of view, because from a trading perspective, a bounce which was very much expected has already been seen yesterday. A further follow-up move can be seen, but 725 is the important resistance, since that's the 21-day moving average for this particular counter. So till the time it doesn't crosses above the same, where we are expecting some consolidation to continue. But it's a good bet. It should be added in the portfolio. These are the quality stocks, and positionally we are very much bullish for 800 plus kind of a target. But purely from a trading point of view, I think after yesterday's spurt, it is better to avoid for the time being, till the time we see any confirmation.
Okay, all right. So 800 is what you're eyeing out for. Nilesh, just quickly on the take of your broader indices, because that saw a good relief yesterday. Do you expect this reversal to sustain going ahead?
See, very unlikely to be a sustainable, but yes, as mentioned, the indices, majority of the indices are trading in the oversold territory. So a dead cat bounce, or I would say a pullback, that cannot be ruled out. So in the broader markets where we are seeing a lot of underperformance, so yes, we are expecting a pullback to continue, but at the high levels, very unlikely to be a sustainable.
Okay, very unsustainable, highly unlikely at this point of time for broader end of the markets. Yesterday we did see that the small caps had outperformed the headline indices, but we'll watch out if today also the sustainability continues. But first trades coming on your screen, we have opened above that 2200 mark at this point of time, flat in the red, but however, 0.1% gain coming in for the Nifty 50 index. A good open, but we will watch out if this gains is sustainable throughout the session also or not. Sensex also opened flat in the green, but above that 73,000 mark at this point of time. Bank Nifty index definitely supporting the overall broad-based recovery that we are seeing at this point of time, which is your 0.1% gain coming in from the Bank Nifty index too. If we look at the auto index, after yesterday's fall, Nifty auto index has seen a good comeback, 0.5% gain coming in there too. Nifty metal index also giving out and eking out in 0.5% gain at this point of time. Nifty IT index, much to a relief, giving out a percent gain at this point of time. If you look at the other indices, Nifty Pharma index rightly unchanged at this point of time. We'll watch out for this index going ahead. If you look at the broader end of the market, small cap indices again, once again today 0.5% gain coming in for the small cap index. If you look at the mid cap end of the markets, well, mid caps is also showing a bit of a resilience and 0.5% gain coming in at this point of time for the broader end of the markets. Let's take a look at some of the top gainers on the Nifty. Well, Hindalco nearly 1% gain. Hindalco topping the Nifty 50 gainers list. That is followed by ICICI Bank, NTPC, Tech Mahindra, and SBI. XBI extending its gain today to the extending its gain after yesterday. Tata Motors also seeing a bit of a gain, 0.5% gain coming in for Tata Motors too. On the other hand, if you look at the top losers on the Nifty 50, well, Bajaj Twins is dominating the list with a cut of about up to 2% at this point of time. L&T, SBI Life, Cipla, Shriram Finance seeing a cut of about nearly 0.5% or so. But yes, as we were talking about Nilesh, we were talking about some of the sectors that you need to watch out. Anything that you are watching out for keenly going ahead?
Absolutely, Lavisha. So as mentioned, stock-specific action is something that we are eyeing on, and good attraction can be seen in the crude oil-sensitive stocks and sectors like OMC stocks. So within OMC space, BPCL is something that is looking attractive. The risk and reward is also looking favorable. So BPCL can be bought for follow-up move to continue towards 260 to 265. With a stop loss below 247, BPCL is a long. Apart from that, Indigo is another stock where we have seen a good breakout yesterday from a symmetrical triangle formation. Today, we are witnessing a follow-up move in Indigo. So Indigo can also be bought, and one can keep a stop loss below 4530, and upside may extend towards 4700 to 4780. Apart from that, if you look at overall broader markets as mentioned, so some follow-up move is something that we are expecting, and it looks like that is likely to continue. So within that space, if you just look at CESE's particular counter, yesterday we have seen a good breakout coming in this particular stock. So CESE can be bought at current level for a follow-up move to continue towards 142 to 145. Stop loss can be placed somewhere around 134.
Okay. Let's take one stock in focus, which is your Ambuja Cement. Well, the stock is reacting positively after CCI gave its green light for the company to acquire Orient Cement. And once this acquisition is completed, Ambuja Cement will hold about 73% stake in Orient Cement. Nilesh, how does the stock look like on the charts? Because past 6 months, Ambuja Cement has seen significant correction. What does the near-term hold?
Correction was largely seen across all the cement pack, but if you look at Ambuja Cement, specifically this particular counter, it has formed a good double bottom kind of pattern on the daily time frame chart. So there are high possibility of a follow-up move and a rebound to continue towards 485 to 495 from a short-term point of view. So yes, can be bought, can be added purely from a trading point of view with a stop loss below 462, and upside may extend towards 485 to 495.
Okay, 495. Let's take another stock in focus, that is your RVNL, which is buzzing in trade today after the company received the letter of acceptance for a project worth about 730 crore rupees. Nilesh, how does the stock look like on the charts? Railway counters have been taking a seat back, but how do you see the stock going ahead?
Merely a pullback can be seen, but not looking conviction as of now. So as of now, if you look at all the railway stocks where we have seen a lot of corrections, so after such a sharp correction, there could be possibility of a dead cat bounce. But better to avoid till the time we get any confirmation. But merely a pullback can be seen as far as RVNL is concerned. It has a strong support around 330, 329, I would say. 329 should be the stop loss for the long position. But I won't recommend taking any contraband at current level.
All right. Let's take another stock in focus, which is your GE Vernova TD. Well, the company has won about 3 orders, which is worth about 500 crore rupees from Power Grid. Nilesh, Q3 for the company did see a good profit jump. We can see like 3-fold profit jump. A good set of numbers, but the stock has seen significant correction this year. Do you expect a good turnaround going ahead?
Looks difficult as of now because the stock is in a gradual declining move it has witnessed. So the stock is currently witnessing more sort of a consolidation. So this consolidation is likely to continue. Better to avoid for the time being. Some pullback in between that cannot be ruled out. It is currently trading somewhere around 313. So stop loss should be placed around 307, and pullback may extend towards 320 or 325. But not advisable to take any contraband at current level.
Okay, all right. Let's take some stock, queries that is popping up on our live feed. Well, the first query coming in from Naveen is on the view on Vijay Diagnostics. Nilesh, how does the stock look like on the charts? We've seen 13% downtick in the past 1 month.
Right. In fact, in last two sessions, if you see, there was a bit of a spurt with a good volume attraction as well that we have seen. So could be possible that we may see a follow-up move towards 1050 or 1100. But as of now, the chart is not convincing at all to take any aggressive long bets. If somebody is already holding the long position, can keep a trailing stop loss below 940, and I would advise to stay put for a follow-up move to continue towards 1050 to 1100. But again, looking at the structure, it is advisable to keep booking profit at the high levels as well.
Okay, all right. Naveen also has a query on Bharat Electronics. Nilesh, how does the stock look like on the charts? We saw second streak of gains coming in.
Absolutely. So, if you look at defense as a whole, we have seen good momentum. In fact, Bharat Electric, this particular stock is also looking attractive. It has formed a good base formation in the zone of 240 to 245. After 2 days of spurt, there could be possibility of some profit taking. But if somebody is already bought, then I would advise to keep a trading stop loss somewhere around 255 and stay put for a follow-up move to continue towards 272 to 278.
All right, okay. Let's move on to the next viewer query. That is, your Satya is asking the view on the major support levels to buy IRCTC for the long term. Do you see this as a favorable buy for the long term horizon, Nilesh? IRCTC.
Right, so it has witnessed a good decent correction from the highs after making highs near about 1125. The stock is available almost at 50% corrected price. It has a major multi-month support somewhere around 550 to 570. So still there is some more room left on the lower side. But if somebody is looking to add in the portfolio from a positional perspective, I would advise to buy in a staggered manner. And as far as stop loss is concerned, that comes somewhere around 550. And yes, definitely it can be added in a portfolio purely from a positional point of view. It has a potential to move towards 850, 900 or maybe 1000 kind of levels from 1 to 2 years perspective.
Okay, all right. Let's move on to another viewer query. That is, your Kishore is asking the view on PNC Infratech. PNC Infratech, how does the stock look like on the charts, Nilesh? Because after October, the stock has completely fizzled out gains and it's trading around like 250 to 300 range.
Well, not looking attractive at all to initiate any long position in this particular counter. But if somebody is already holding the long position, then one can keep a trailing stop loss somewhere around 233 because 233 is a very strong support. So that should be the stop loss for the long position. There could be possibility of a pullback. Pullback may come towards 265 to 275, but it's not advisable to take any sort of long bet at current level because there are no signs of reversal yet.
Okay, no signs of reversal yet on the stock visible for PNC Infratech. But let's take one more stock in focus, which is your Power Grid, because the stock is reacting well. And we also have a viewer query on Power Grid by Kanan Manthan. Well, the company was declared a successful bidder for 3 projects to establish an interstate transmission system on a BOOT basis. But Nilesh, the stock has slid about 11% past 1 month. So where do you expect the stock to go next? Is it a good, accumulation point at this point of time for the long-term horizon?
Absolutely. So a good bet to add in the portfolio once again. So power space, energy space, this particular counter, he has given a good decent correction. So if you look at from a positional perspective, these are good levels to enter in this particular stock. And in the last 2 sessions, in fact, this particular counter has outperformed. So we can expect a follow-up move to continue towards 270, 275 from a short-term point of view. But positionally, the stock has a very strong support somewhere around 235. So first of all, that should be the stop loss for the long position, can be added in a staggered manner. And yes, it's a good portfolio stock from a positional perspective.
Okay, all right. Let's take another viewer query. That is, your Pringle is asking the view on Exaro Tiles. Well, a small cap stock and a penny stock, Nilesh, but what is your views on the counter?
Exaro Tiles, could you please come again?
Yes, Exaro Tiles.
Right, Exaro, it is currently trading at 7 rupees, if I'm not wrong. So,
Yes, yes.
if it is, yeah, so we actually don't track this particular counter. It's a kind of a penny stock, better to avoid taking any bet in this particular stock.
Okay, all right. Let's move on to another power play that Kanan Manthan is asking the views on PFC. How does the counter look like for you, Nilesh? PFC, any views on the stock?
Looks good. In fact, this particular stock has given a good, strong reversal yesterday. PFC, REC, both the stocks are looking attractive given the kind of risk and reward at current level. So PFC is a buy at current level. In fact, this was also there in our recommendation list as well. So one can keep a stop loss below 370 and a long position can be initiated for a follow-up move to continue towards 405 to 425.
405 to 425. Well, let's move on to another viewer query. That is your Shweta Naidu is asking the views on CDSL. She's bought it at 1267 rupees and whether or not it is a good time to add more at the current levels or is it going into a long consolidation. CDSL, how does the stock look like? Right now it's at 1111, 1111, 10. But where do you expect the stock to go next, Nilesh?
Well, we have seen a sharp decline in this particular counter. So after such a sharp fall for the third consecutive month, the stock has reached to its multi-month support zone, which is placed somewhere around 1060. So first of all, 1060 should be the stop loss for the long position. If somebody is looking from a positional perspective, then yes, this particular counter can be average and can be added at current level as well. Positionally, this particular counter has a very strong structure. But right now, what we are witnessing is a kind of a carnage in mid cap and small cap, and that's the reason the quality stocks are also falling. So yes, this particular counter can be added as a positional bet, and it can move towards 1350 to 1400 from next 1.5 year time frame. Stop loss should be placed somewhere around 1050.
Okay, 1050 stop loss for the counter. But let's move on to another buzzing stock, which is your Biocon, because the stock has been reacting well with about 2% gains. The company's arm received a US FDA final nod for its cancer drugs, two of its cancer drugs, and the arm also received a tentative approval for its drug, which is used to cure blood clots. Nilesh, the stock has seen significant slide. Past 1 month, we can see 17% slide coming in. Do you expect further pressure to continue, or can the stock enter a zone of consolidation?
Well, Biocon, after a sharp decline in last 2-3 sessions, what we have seen is a kind of stability and a kind of a base formation, I would say. Given the kind of extreme volatility in the market, the focus may once again shift toward defensive. So Nifty Pharma Index, first of all, is looking good after a sharp correction that we have seen recently. So there could be possibility of a pullback. Biocon also looks good for a follow-up move to continue towards 330 to 340 on the upside, and stop loss can be placed somewhere around 310. So it looks good at current level.
Looks good at the current levels. Well, let's move on to another viewer query. That is your Shweta Naidu is asking the 1-year view on CG Power. CG Power, how does the stock look like? Past 1 month, 3% decline, but still modest compared to other counters what we have seen. However, the Q3 was quite underwhelming. Where do you expect the stock to go next?
Well, absolutely. If you compare with the market, this particular counter, in fact, did not correct that much. In fact, it is forming a good base formation in the zone of 550 to 570. So looks good at current level, can be added from a positional perspective as well. If you are looking from a next 1 year time frame perspective, it has a potential to test 700 to 750 on the upside. So stop loss should be placed at 550. So risk and reward is also looking favorable. There are high possibility of a stock, if at all it breaks above 700, which is a 200-day moving average, then the next target would be somewhere around 800 to 850 as well. So a good portfolio stock can be added at current level.
A good portfolio stock that can be added at current levels. But let's move on to another view, okay, which is your Bahadur is asking on the view on Tattva Chintan for the next 1 year. If you look at from January onwards, the stock has gave up the 800 odd levels, Nilesh, but right now it's trading around 700 to 600. Where do you expect the stock to go next?
Well, Avisha, if you just pull up its 5 year chart, you can clearly see the stock is constantly witnessing a decline since 2021. And it is constantly forming a lower top and lower bottom formation on the weekly time frame chart. So that clearly shows that the trend is still on the negative side till the time it doesn't crosses above 850 on the upside. So any pullback, whatever pullback we may see, that is likely to get sold into. So not advisable to take any contraband at current level. But if somebody is already holding the long position, can keep a trailing stop loss somewhere around 660. and stay put for a pullback. At least pullback may be seen towards 780 to 800, but not we don't see any sort of V-shaped recovery or any sort of a sharp rebound in this particular counter. So better to avoid.
Better to avoid at this point of time for this. But let's talk about Varun Beverages, because yesterday the counter had given good gains after CLS upgrade, and even Jeffries has given an upgrade on the counter. Today also the stock is reacting well, but where do you stand on the counter, Nilesh, for Varun Beverages?
See, VBL, after a good correction for the third consecutive session, although we are witnessing a pullback, but this pullback is not supported by the volume. So, very unlikely to be a sustainable one. 500 is the psychological resistance zone, as well as the recent swing high that was being seen at 500 as well. So, till the time it crosses above 500, there are high possibility of some supply coming in. So not looking promising at current level, but if somebody is already holding the long position, can keep a trailing stop loss at 460 and wait for a breakout to come in above 500. If it breaks 500, then it will negate the negative formation. Then probably we may see the levels of 540 to 560 as well. But watch out for 500 levels on the upside, which is acting as a stiff resistance.
All right, 500 levels that we need to watch out for. Just one last question before we let you go, Nilesh. Any top picks that you have for this hour? Anything that you're finding attractive at this point of time?
Absolutely. So, as mentioned at the beginning of the show, that we are focusing on stock-specific action. So, a lot of stocks are on a radar. So, first of all, we already spoke about REC, PFC. Both the stocks are looking good. Apart from that, Siemens is something that is looking attractive given the kind of a base formation that we are witnessing. So, there are high possibility of a follow-up to continue towards 5,250 to 5,300 on the upside. So, with a stop loss below 4,920. Siemens can be bought for the upside target of 5,200 to 5,250. Apart from that, if you look at other stocks, we also spoke about CESC. CSC also looking attractive for a follow move towards 144 to 148 with a stop loss below 134. CESC can also be bought. And crude oil sensitive stocks, Indigo, OMC stocks like BPCL, these are also stocks that we are keeping an eye on.
Okay, all right. With that, we have to let you go, Nilesh. But thank you so much for your time, for answering our viewer queries. Hope we connect with you soon.
Thank you, Lavisha. Thank you for having me on your channel.
Okay. All right, let's quickly take a check of the markets. Well, we have recovered.